Hi, welcome to the Market Alert for Wednesday, 10th of April 2019. So we're stuck in a bit of a range at the moment in the pound, obviously waiting for today's news of May here. Could be expecting a longer Brexit delay. There was talk of Tusk wanting it until June of next year. I don't think May would actually stand the job for that long, to be perfectly honest with you. And the uncertainty that it will create. So today is an important day as far as this farce is concerned, and you may see the pound rally because of the extension as well. It will be good news for the pound. Let's have a look at the potential upside target, just in case. That's where I would place a bet of the market stopping if we do get a longer extension, but we're certainly not going to be falling out of the EU this coming Friday, that's for sure, unless by some strange thing. Otherwise it'll be continuing saga. And yesterday you can see how bits of news affected the markets, and then it returned to the downside and into this sideways range. So very quiet at the moment, but again, wouldn't be at all surprised if at some point it's revealed that they were holding this market to the upside. News today. We've got a lot today. We start off in the UK. We've got the GDP month on month. This is forecast to be slightly lower, so Brexit will be blamed for that. Manufacturing also forecast lower. Again, Brexit will be blamed for that. And then we're off to the EU. Super Mario is going to be out today. He's going to be talking about Brexit, no doubt, and its effects upon the European economy. Nothing to do with the fact that interest rates are negative. 10 trillion euros of loss. In fact, let me show you this. There is a website that shows you the European debt. There's a brilliant statistics on there. Just one second. Actually, let me just finish off the news. We've got then the main event for today, which is going to be the FOMC meeting minutes at 7 p.m. That's what the Dow will be waiting for there. Okay, let's have a look at the website for the European debt. Right, here we go. This is the Debt Clocks EU, that's or .eu, that's the actual name of the website. So if you just type this in, it will take you to it. And then when you get to here, click on member states and then Eurozone for the total. The other makes for fascinating reading as well, but here you can see that the absolute debt is 10 trillion. And I can tell you now going forward that Draghi is going to have to start printing more money to keep the European Union afloat as well. So at the moment we're sitting at 10 trillion euros of public debt, which is impossible to pay back throughout the Eurozone. And this is one of the reasons why the UK is not going to be allowed to leave, because at some point this is going to have to be funded by somebody. But it makes for fascinating reading. And also the individual comparisons as well. You can go and have a look and see what the GDP debt ratio is for each country, in particular Italy, sitting on 2 trillion there. You can see what the rest of the statistics are there as well. They're running at a 37 billion deficit as well. There's only one or two countries that are running with a surplus, or member states, but yeah, well worth a look there. That's where the total debt is if you want to find it. Okay, meanwhile in the Dow, we got a down day yesterday. This market's been looking fairly weakish, as I pointed out yesterday, with the volume dropping off. No great selling yesterday either. Prices sideways to higher, waiting for the FOMC meeting minutes tonight. I wouldn't expect any great shakes from that either, to be honest with you, but the upside target to return is 26,399 should prices move higher during today, which is every likelihood that they could do to keep this market afloat. Yesterday the selling took place in the pre-market session, which You can see there, market dropping down 250 points and then finding support. You see them testing there, and they brought the market back 50%, just under 50% there, and then just traded sideways. So all of the activity yesterday in the pre-market session as the market broke the 200 bar moving average there. And then finally in Bitcoin, in the daily chart, you can see prices are holding, and we've got that same ascending triangle formation that we had when we looked at this one here. You see when I mentioned about this one breaking out a week ago on Monday and prices broke to the upside. Well, now we have this sort of pennant formation there as well, and at the moment it looks like prices are going to make a punt to the upside there as well. However, just in case this isn't going to be, I would be inclined to go to the low here to this high and watch for a retracement down to here, and then move back to the upside. So there is always look at both sides of the story there. Don't get fixated in one direction. Certainly the market's broken out. Yes, it's looking very bullish, and the test really to the downside would be to find support here. But at the moment we have this sort of pennant formation which tend to break out to the top, where you've got that ceiling which we saw, as I said, a week ago on Monday. And also keep in mind as well, we've got the more or less rising lows. This one's just slightly lower than this one, and this is a rising low, as is this as well. So again, bullish situation for the cryptocurrencies at the moment. Okay, that will do it for this one. If there is anything else to report today, I will let you know. Keep an eye on the Eurozone meeting and also the FOMC at 7, but I think both of them are already baked into the cake, as they say, so let's see. Okay, that'll do it for this one. As ever, thanks for watching. See you in the next one.